Boy, this market certainly didn't disappoint this week. This was a trader's week. The market certainly started moving once we started getting those earnings news flowing.
We started the week off flat Monday and Tuesday. Then Wednesday, we saw the tech sell-off pick right back up as some earnings started flowing in from Tuesday evening into Wednesday morning. Bloom Energy was one of those big ones. It's a big AI energy play, and they released wickedly good numbers. And then the Fed held rates flat as expected. This week was saved by Microsoft, who was up 16% after earnings, and Amazon, who was up 17% after earnings, showing that the AI adoption is starting to pick right back up with their above average growth in both of their cloud divisions. This helped justify all of the data center spending we've been seeing so far. While Meta, on the other hand, is spending on their data centers with no plan to get back cash flow positive, and then the market just punished them. They were down 10% after earnings.
The main earnings week event is now over, so now we have to wait and see how the big man them react to all of the news that they just got. So they have to sit back and digest the news, and we're gonna see how they react to it and follow along. I'm the Wall Street Yardie, and this is the weekly market report for the week starting August 3rd. I'll get you set up and give you a plan so you understand where the market might be headed so that you could stay on the right side of the trend. From a macro perspective this week, we have ADP payroll report coming out Wednesday, and then we also have the non-farm payroll coming out on Friday. So we're gonna pay attention to those because those could be two market moving events as well, especially if they don't line up with expectations.
One more thing I'm watching this week, Japan is dealing with rising interest rates, which is causing a lot of banks to take on some losses. With Japan having these issues, we need to watch the US to yen dollar ratio because another fast yen rally could force large investors and leveraged investors to sell assets to repay the funding they got when they borrowed the money out of Japan. We discussed this in a previous weekly market report. I'll link it above so you can have it, and I'll also put a link in the description so you can check that out. We saw a similar thing in August 2024 when the yen strengthened and the yen carry trade forced the market to drop 10% in a couple weeks. We also need to pay attention if there's weaker jobs data, rising expectations from the AI trade, and another Bank of Japan rate hike. The yen could strengthen quickly and put more pressure on the market the same way we did back in 2024. Once a month, I like to zoom out on the charts and see what the candle for the month is looking like, just to see if there's any warning signs we need to pay attention to. We're now looking at the monthly chart for SPY, where each candle here represents 1 month. And what we're seeing is we have a doji candle formed for the month of July, signifying that buying and selling has come to a draw. Second month in a row now that we have small body candles, after having 2 strong months in April and May. All of this happened, and we close out the month of July with SPY unchanged, up 0.03%. Nothing really, right? What was even more interesting for me is when we take a look at the QQQ, which represents all the tech stocks, we see a big bearish signal pop up even more prominently. Given the Mag 7 is 40% of the SPY and they're all tech, this is a big warning sign for a potential bad month following that rough July that we just saw. We saw a similar pattern form back in December 2021, right here on the chart, and that led to a much larger downside. The move in 2021 lasted 9 months, all the way into 2022, and resulted in a 36% decline of the market from the high at that time. This was known as the post-COVID crash, and we had high inflation, just as we do now, and as you can see, we had a raging bull market headed right into that crash. So when you see these kind of patterns forming, it's a great time to consider putting on some hedges, and we'll discuss that at the end when I give you the trade I took on Friday to prepare for this move lower. The next thing we're going to be watching this week is several key earnings. The main event is gone, but there's still some big plays out here that we need to pay attention to for the rest of this earnings season. The first up is Palantir. Of course, big AI darling, more focused on the software side though, which is now picking up now that we're seeing Microsoft and Amazon showing growth in their data centers. The next one we're going to be watching is Pfizer on Tuesday, and then Lilly on Wednesday. The healthcare space has been hot lately with great earnings from Bristol Myers and Johnson & Johnson last week. The healthcare sector, as we could see here from the Wall Street Yardie app, is the 3rd best performing sector in the market this year. Has an 18% return so far year to date, and it's outperforming the market by 8%. So we want to pay attention to these movers, as this is where the money is kind of flowing into. Tuesday evening also brings us back to tech with AMD, which has been another very big hot stock this year. And then the first earnings report for SpaceX. Then we get to Wednesday, and after the close on Wednesday, we're going to get SanDisk, Western Digital, and they're going to talk about AI infrastructure and kind of show us what the demand might continue to be there. So we're going to listen for continued demand with profit margins staying as high as they are now. If the profit margins start to shrink, then the market is going to love them a little bit less. We round out the week with Datadog, which is on the data and the AI training side of things, right? These are the guys that feed the data to the AI models so that they could get better every time we get a new model. And then we also have Oklo, which is a small nuclear reactor play, which brings energy right to the data centers on site. And then Vistra, which is already a huge player in the data center energy as well. So let's jump over the charts now, get our levels for the SPY, and I'm gonna talk to you about this trade that I set up so that we could take advantage of this upcoming bear market. All right, looking at the SPY one-day candlestick chart now, we've been watching our triangle this whole time, and the price action from last week brought us all the way back down. We didn't get quite down to our 725 target to the downside, but with all the great earnings from Microsoft and Meta, all we did is we came back up, filled the gap from last Thursday, if you can see that right there, and then we rejected right off of this trend line. So this is a pattern that you want to pay attention to as well. When you have a trend line, especially an uptrend line like this, and price breaks below it, just like we had here on Wednesday, actually all from last week through that gap, and then it comes back and it's going to retest this area. So this retest, if we continue on down as we have here with our blue path, this is the pattern that is going to lead us into that reversal and start going into that bear market I've been talking about here from the intro. So we've got a nice rejection off of that trend line. We now have to wait and see what happens on Monday and Tuesday to see if we're going to get lower highs and lower lows and follow and continue on down our path. If that's the case, then our target continues to be 725. If we break and close below that with any kind of volume, obviously our target is going to be down here. I know I've got 698 marked, but it's really 700 is what I'm watching. You can see there was a little gap area here right around 705. So this is what we're going to be paying attention to. Monday and Tuesday, can we break above this trend line, or are we going to continue to get downward pressure and continue on the path that we've drawn here, and then get back inside of this downtrend line, which was the other half of the triangle, and pay attention to that. So that's what I'm watching on the SPY. As we spoke about in the intro, the Qs is giving us a really bearish signal here. We had in the month of June a very small doji candle, right? There's a super small body there, long wicks, super small body and long wicks there. And we created all-time highs off of that. But the month of July, we saw lower highs and lower lows with very bearish action here. And the volume both of those months is pretty right spot on average, right? So we got to trust that when we get to the monthly candles here, which is what we're looking at, we have to pay attention to this because these larger time frames carry a lot more weight than watching the daily or even the intraday, which are just small fractions of this. So we're seeing the momentum shift here right before our very eyes to the downside. So we're going to watch and pay attention throughout August, but this is signifying that August is probably going to be a lower month with a target for August somewhere down here at the last high. So this is going to be around that 635 level. So with that in mind, I want to take a look at the SQQQs, right? I could certainly put on a put trade on the QQQs, and that certainly would be totally fine. But right now, those things are priced extremely high. And secondly, I wanted to give a trade that everybody can participate in to the downside. So there's an ETF SQQQ, which is the short, ultra short QQQ. So this one trades the inverse of the Qs. If you notice, the QQQ chart was going to the upside, and this one is literally flipped to the downside. So if I flip back over, you'll see anything that was moving down here is going to be moving up here, right? So that's how this works. It's an inverse ETF, which means when the QQQs go up, this goes down, and vice versa. When the QQQs go down, this goes up. So given that we think the QQQ is going to go down and we're going to want to play that to the downside, I'm going to take a look at SQQQs here, and then we can play this by buying these shares. So you can buy the shares of the SQQQ. If the Nasdaq drops to the 635 like we thought, this thing will start to shoot up. Now, here's the best part of it. Because this is ultra short, that means it's 3 times leverage to the downside. So if the Nasdaq moves down 1%, this is going to move up 3%. So you're going to want to pay attention to this. This is a trade. This is not something you're going to buy and hold. You're going to pay attention to what the QQQ is doing. And the minute that starts turning around and getting some kind of correction, or if you're paying attention to this one, the level or the target to the upside is somewhere right around, I'll call it 60. Let's move that right to 60 because I like the round numbers, right? So 60 would be our target on this. If you get to 60, it's time to take some profits, okay? And then we're going to pay attention to what happens from that 60 level. Can we keep peaking up here to 61, which is kind of where the range is for this? It's actually a little bit higher than that. I've got to come up to these lows here and start touching. You want to, when you do your support and resistance levels, you want to find a level where you get multiple touches. So I get all this history here, all this history here. So anywhere between 60 and 64, that is going to be your sell area. That's where you're going to start to take profits if you're going to go ahead and buy the shares and take this SQQQ. Now, as an option trader, you could certainly go into SQQQ as well and buy a call option. And again, we would be looking to take profits from that call option here. The call option that I purchased was in October, so I wanted to give myself some time. So the October 60, actually the October 45 call is what I purchased because this is where I saw the breakout level from, was 45 here. So if you notice, we have these highs, these highs. We started to break out. This was the Wednesday low. This was the Wednesday low that we had on the chart a second ago on the QQQ chart. And then we pulled back. So Thursday, Friday were good days, right? So this clearly pulled back. So I'm expecting us to continue down in August. So I bought that 45 call for October, giving myself time. If August does play out the way we can sell out of this early, collect our profits, and then move on to the next trade.
All right, so that's it for this week. Don't forget to link me in the comments, and then also mash that like and subscribe. Catch you on the next one.